right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So what we're going to do is we're going to get started going through all of our majors, and let's start with the euro dollar. And so, like I said, yesterday I covered my euro short. I felt it was a little premature, but at the same time, I know we're approaching some really key key supports here, and we were yesterday. And you can see as we're trading down at these prices yesterday. We were approaching that 618 retracement breakout point, and all of the flag pattern completion. If you look at how far the flag can go, anywhere between 108.45, which will be the 618 retracement, the breakout point here, and then 108. This is all going to offer support. I think, and I got to say this again, the problem that anybody who's a euro bull or a dollar bear, the biggest problem that you have right now is that the pullbacks have been very minor. I mean, if you look at this, that's all you got. And whenever you have a minor pullback, and it's not you don't get a real big price rejection. You just get a like this, and that's what we're seeing here. The likelihood is another equal move. So I mean, if you take this, you take this move down here in the euro, moves like that, and then you consolidate. I mean, we could very easily just start moving again towards. Because what's happening is you're not given an opportunity for shorts to get out or longs to get out. So longs are, getting stuck, holding the bag again, and that's the biggest problem I see with the euro at the moment. And that's why I'm like, same thing with the dollar yen. It's like, man, fading, it's tough. It's a really tough trade. So anyway, critical support today, just like we wrote down yesterday, is going to be I think we wrote down 108.45, but we're going to write down two levels, 1.08 and 1.0845. Okay, resistance. I mean, hell, I was thinking 110 yesterday would have been some great resistance if we can get there. Problem is we're not even getting close, and you can now clearly see what's critical in the market. Very critical, because this is an hourly chart. Okay, you can see spike low, spike high, spike high. So as long as we stay below 109 and a quarter, 30. Okay, 109.30. Bears are in control. Okay, we have to remain. I think we're in a range, but right now it's a bearish intraday bias, and the bears remain in control unless we get above 109.30. We get above 109.30, it's going to shift it back to neutral. Okay, and the problem is well, and just because it's bearish here doesn't mean that I'm willing to short the euro dollar. But I will tell you this: if for some reason we just start surging towards 108 and it doesn't look like we're going to stop, I'm going to have to start shorting the euro again. Now, there's a lot of things that actually have to happen in order for me to do that. So let's talk about them. Let's go to the cable. So here's the pound. So 153.35 is the 38% retracement. We have yet to come down to there yet. I mean, we've yet to come down to there to test that support. I do feel this is pretty key support here in the cable. I mean, if you look, the great thing about yesterday is not a whole lot happened. So last night, so it's been a very quiet night. But look at the nature of the pullback here in the cable versus the euro. So let me just overlay the euro dollar really quick. Oops, damn it. Hold on. Okay. So you can see the real big divergence between the two. I mean, the euro dollar pulled back at 618. Cables barely pulled back at 38% retracement. That obviously is very bearish for the euro pound, which I'm short because you can see how the euro has diverged away from the cable, where the cable's just not really following. Well, what that means is twofold. It means that if the euro bounces, and now I'm giving you an if, but if the euro bounces, the cable is going to bounce really aggressively. So if we break above 154, what's the spike low here? 45. 154.45, that would be very bullish. Now, the support right now is 153.35. Okay, that is a 38% retracement. And as long as that's holding up, I mean, the cables, the risk of a bounce is high. But man, if the cable breaks through that, euro takes out like 108.45, we're going to see another wave of dollar buying come through the market. Okay. Okay. Um, let's go to the Swissy. Now, the Swissy is really weak today. I mean, look how let me just show you. So you got the euro that's up 1 pip on the day, pounds down 1 pip on the day. Swissy's down 22. Swissy should be up at least 1 pip, if not, up more. But oh man, the Aussie's hitting new lows. Holy guacamole! We're gonna have to go into those charts here in a second. And these are the reasons why I'm not 100% convinced that the dollar's ready to turn. These three currencies, by the way. Well, actually, you can say these four. But let's go over the Swissy. So the Swissy's been underperforming. So there is the downsloping trend line from yesterday. Do we have any Swiss news overnight? We did. UBS consumption indicator, like that's gonna, I, I can't imagine that's the reason what pushed the Swissy lower, but I would assume the reason why the Swiss has got a little bit of a bid is just because of the the risks right now associated with Greece. That would be my 2 cents. But anyway, so we got this failed rally attempt above this trend line. Okay, you can also see how we failed. This is a very high, I like to call it like a high traffic area. You can see how much the Swissy struggles through here. Go all the way back. You can see very congestion type of area. We went right into it. Okay, very tough. I'm gonna get rid of this downtrend line at the moment. The Kiwis the Swissy is it's a very tough currency to trade at the moment. I'm very disenchanted with the Swissy at current levels. I haven't been long. I haven't been short. I haven't really wanted to play it at all. Um, I'm going to look at 94 cents as being really key support, but that's pretty far away from where we're currently at. I mean, you can see how the hourly charts, see how we're rallying in price, divergent relative strength, which obviously stalled the Swissy. Um, I mean, the Swissy just does not look like any fun to trade at the moment. So let's do this. Because of that relative strength diverging as it was, This is going to be a very tough resistance to overcome, which is 95.35, and then supports down here at 94.55. Okay. Point 95.35, 94.55, and there's nothing to do with that currency at the moment. Nothing. All right, let's go to the yen. So if you're just tuning in, I am short the dollar yen. I'm short at 123.50 currently. All right. Um, the reason why I'm selling it is because, and let me go ahead and reiterate. Here is the several month consolidation. We broke out, we hit 127% extension. The 127% extension reached in 2 days, to me, is worth taking a counter trend trade. The only issue that I have right now is that the dollar looks like it's not backing off at all. I mean, not even against the yen, but I mean, you look at the dollar Canadian, look at the Kiwi, look at the Aussie. I mean, those currencies look extremely strong. I'm down 16 pips right now, but remember the pip value is a lot less. And you might have missed me say this earlier, so I'm going to say it again for those of you that haven't traded the dollar yen up at these levels. We're at levels we haven't seen for 10 years. So the pip value is a lot less up here. The pip value right now is 80 cents. So that means every pip you make 80 cents or you lose 80 cents. So it doesn't hurt as bad. If you're down 17 pips, if I was trading the euro dollar, it'd be like being down 14 pips or 13 pips. So the moves, the further away you get away from 100, the less pip value it is. So for example, if the dollar yen went to 130 or 140 yen, the pip value might go to 70 cents and maybe even to 60 cents. You know what I'm saying? So the further away we get from 100, the less money you make when you make money, and the less money you lose if you're losing money. So just FYI. But anyway, I sold some at 123.50, okay, as my cost average, because we reached this 127% extension so quickly. But we're not backing away either. I mean, we're hitting new highs. Look at this 4-hour chart, hitting new highs. We're obviously very overbought. You can see relative strength right now. It's even divergent. High, 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 no high. So we're diverging right now, which means that we're probably going to struggle as we head up here. But we got to look at the next resistance level. I mean, if you go over to the monthly chart, so we have a high price at 124.15, 124.14. That level hasn't been seen since June of 07. Okay, so that's our next real resistance that I see is 124.14, 124.15. We can just, that's going to be obviously a pretty key level of resistance that we need to watch. Okay, we're in a bullish trend because we broke out. So let's see where we're supported. Let's go to the hourly here. Okay, so it was our hourly range before, as we broke out. So as long as we stay above this spike low right here, which comes in at 122.77, as high as 122.87. So basically 122.80. As long as we stay above that, we stay bullish. I mean, it is bullish. I'm short, but you know what I'm saying. 122.80. Okay. Um, so there we go. Let's look at let's look at the dollar Canadian. And okay, so we have our flag pattern. Flag pattern completion. We're almost gonna we might actually complete this damn thing before we even get to the Bank of Canada rate decision. That completes at 125. We also have the 618 retracing that comes in at 124.85. You remember from yesterday. So and that 618, by the way, is of the entire range. So if you take the highs way back in March to the lows a couple of a week and a half ago when we were buying the Canadian, we're about actually at the 618. Okay, again, very high traffic area. You can see congestion area galore. I mean, look at how busy this area is through here. Okay, very, very busy. Um, so 124.85 to 125. I mean, this is all really key level of resistance. So I'll just write down, well, 124.85, 25, and I'll put an asterisk there. Okay, we are still really in our range. I mean, pretty range bound in the Canadian, but it's very strong. And if the Bank of Canada is if the Bank of Canada is um, if the Bank of Canada is dovish today, we have the potential of us moving up towards 125 pretty easily. Okay, and that's one of the reasons why I'm afraid of the U.S. dollar might get kick-started again, especially if we just surge above 125. We take out 125 and we start making a run towards 126. I mean, the dollar's not going to have much choice but to continue higher. All right, let's figure out where the support areas for the Canadian are. Well, obviously we're above 124, so 124 is support for now. And you know what? I'm going to change that. We are in a range, but we're near term bullish in the Canadian. Okay. Now let's go over to the Kiwi. Now, if you want to know why I closed out my short right here, or 30 or 32 or wherever I covered it, I want to show you this one chart. Oh, this chart's best. You see that? Okay. We are right on support here. So as we were sitting on support, especially yesterday, and we closed right at our lows at we closed at 32 or whatever, because when I got out at like 33. Okay. And the reason why I covered it here is because if we break 71.75, we are going to reinvigorate. Oh my God, look at the euro dollar. What a piece of crap. Wow. The euro is just falling. Wow. Hold on. Here's the dollar. Look at the dollar. It's what I was scared of. It's not really helping the dollar yen at all, but that's good. Um, Kiwi's holding up. Pounds near its lows. Aussie's near 77 cents, which we'll talk about here in a second. But the Kiwi, look, here's my thought process. If we break below here, right, we're going to like the mid 60s. You understand that? The reason why I say that is because, oops, we're going down here somewhere. If we break down, I'm not 100% convinced that this, what happened there? I'm just not 100 ah, I'm not 100% convinced that we're ready to break just yet. Okay. We might be. And if we do, all I'm going to leave basically on the table is about 50 or 60 pips. If we have a 500-600 pip move lower in the Kiwi, which I hope is possible via the pound New Zealand, Aussie New Zealand, that type of thing. Um, if we have another 500-600 pip move down here, if I leave 50 pips of gain off the table in order just to protect myself while we're down here, that's fine. If I have to reestablish a trade on a break below this 71.75, I'll do it. Okay, but being short up here, covering it down here, and then reestablishing a new short down here on a breakdown, I don't mind doing if I have to. Wow, this dollar is just going berserko. Dollar yen new highs. Man. But anyway, okay. So I'm gonna write this down. 0.7175 mega support in the Kiwi. Okay, mega support. Resistance. As long as we're above or below 72.80, it's bearish. Okay, and new lows, pound. Wow. Relentless dollar move. Okay, but don't go anywhere, guys. I'll be back, and when I come back, we will finish up with the Aussie, the dollar index, and we're gonna have to look at some of the crosses too, see what's happening with the Norwegian krona, Swedish krona, peso. Be right back. Don't go anywhere. All right, traders. This is Blake Morrow. You were listening to the Morning Edge webinar. Blah, blah, blah. See, that's what happens on a. It's today Wednesday. Today's Wednesday. Happy Hump Day, by the way. I realize we're already halfway through the week. Yeah, forget about that when you have a shortened week. Anyway, so let's continue on. So you saw the Kiwi dollar. By the way, it looks like the dollar's pulling back just a little bit. Let's go over to the Aussie. Okay, so the Aussie dollar, you remember we have a flag pattern that completes down here at 76 and a quarter. Okay, now if we break below this support, which comes in at 76.80, 76.75, that's probably going to trip some stops there, especially if we make it through that 786. It's gonna come out taking some stops. I just don't know if we're gonna make it all the way down there, at least not today. Relative strength is diverging on the hourly charts. We hit new lows. Relative strength is not. I'm gonna mark up support as being Right here it's 76, 75, which is not too far away from where we're at. That's 80, actually 76, 80. So you have to imagine that could probably get hit just if you think about all the stops that'll get tripped below 77 cents. So it might boop, one of those. So 0.7680. And resistance now. Ooh, hold on, I gotta sneeze. Okay, sorry about that. Yeah, you didn't want that all over your computer anyway. I put my hand over my mouth. So this previous support going to be current resistance that comes in at 78 cents. But while we're below 78 cents, it's bearish. I mean, we're in a megaphone pattern, so we're definitely cruising lower, grinding our way lower. So 78. Now here's the dollar index. So the dollar index made one push above. See how we've made that push above the. We started a new 4-hour candle too. We made a push above the 618, but I'm not super convinced here. And again, new highs. Relative strength is diverging. You see that? So, um, I mean, I don't know where the next resistance level is. That's the problem. That we're in between fibs. Um, delete this really quick. I'm gonna try something else. Okay, if you don't, you know what? I should probably tweet this just so everybody can see it. This is actually a pretty important chart here. Um, let me tweet this. Okay. Okay. The question is, where's the dollar going? And that's going to be the. I mean, ultimately, I suspect that we're at the 618, but this move here in the dollar should extend itself to that 786 retracement, which will be right up here. So oops. Should be somewhere up there. So okay. Okay. Just give me a second. Just tweeting this out, just because it's a pretty important chart, and if you're standing in front of the dollar right now and you're fading it, you got to be able to see that because it's for me, I'm obviously cognizant of it because I'm short the dollar yen. All right, so anyway, okay, there, it's out now. Um, so where do we go from here? And I mean intraday, because if there was data coming out today, like let's say we had, whatever consumer prices or producer prices or maybe some manufacturing data or services PMIs or something, I would start looking at 98 and a quarter as being very viable targets for today. But the problem is we don't have any data to really power us higher. So this is previous support from over there. That's where we're hitting. I mean, I guess I'll write 98 and a quarter. I just don't see us going all the way up there today. But then again, anything can happen. So, all right, let's go over to support here. So the support will be the overnight spike low. Whoops, went the wrong way. Hold on. The overnight spike low will be support here. Actually, right here. So that comes in at 96.75. And while we're above that, be very careful fading the dollar. Okay. Like I said, I'm short the dollar too. I'm short the dollar yen. So this is as much as a warning to myself than it is to you, as it is to you guys. All right, let's go really quick. I'm going to look at the peso and the Nordic currencies just to see if there is anything here. So there's the peso still maintaining that up channel, if you will. There's the peso. Nothing really exciting there. Here's the Norwegian krona. Strong. Hold on. Let's see. So we're approaching the 50% retracement, 618, matching these spike highs. This has got to be really good resistance for the Norwegian krona up here. Right through there. That's going to be good resistance on the way up. But nothing really too playable from here. I mean, other than, last week it was a good play for those of you that, could trade it when we came out of that range. That was nice, but here's the Swedish krona. Ooh. Hold on really quick. Hold on. Hold your horses for those of you guys that can trade the Swedish krona. Wow. If I could trade the Swedish krona, I would short it right now. I'm just letting you guys know. If I could. I can't, but if I could, I would. All right. And that looks like a really, really good short right now. I mean, because you don't have to risk much. I mean, your risk is maybe above 850, maybe eight, whatever that is. Well, here, I'll write it down. 855, right? Dude, like that. US dollar, Swedish krona, for those of you who can trade it, resistance 8.55. Okay. And then, looks like you can pretty much get a dip right back down to here, which would be 841, right? Like I said, I can't short it, but whoops. But for you, those of you guys that can, I mean, it looks like a decent short from there. Okay.